This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
So if you remember from earlier, I told you that the death estate comprises all the asset held at the time of death at open market value. We're still in the green. Let's get rid of the green and go back to black. So this is the pro forma that you need to be dealing with. We have land and buildings less a mortgage. There's a note here about mortgages at the bottom. Mortgages here. The mortgage reduces the value of the property if it is a repayment or interest only mortgage. If you come across what the word endowment, then that does not reduce the mortgage, does not reduce the value of the property because it's covered by an insurance policy. So remember that there's a note there for you just to read through. Any businesses, any stocks and shares, government securities. If you have an insurance policy, okay, you include here the actual proceeds, not market value. They're probably in the exam question, give you both. You have to choose. Cars, chattels, debts due to the deceased, and somebody owes you money. It might be a refund of tax, perhaps. Somebody owes you something, and some money in cash, ISAs, anything that you own. You notice least liquid down to most liquid. The easiest way to do this is to copy the question into the answer and use the assets in the order in which they are. Tick them off as you are going along. Any debts that the deceased owes, okay, it's got to be legally enforceable, so you can't have gambling debts. Any outstanding tax that might be due, and any reasonable funeral expenses. Then we deduct from there any exempt legacies. Anything going to the spouse is not taxable and needs to be removed from the pro forma. Okay, and then to work out the IHT on the death estate, you work out the lifetime tax, stage 1, and the death on the IHT of all gifts within 7 years, stage 2. You won't get complicated 1 and complicated 2 and a death estate, as I've told you before. Calculate the gross chargeable estate value, the amount of the nil rate band for the residents, which we'll have a look at later, the nil rate band available after you've taken anything out for pets and CLTs, tax the estate at 40%, state who will pay and the due date. So let's have a look at Hamish, example number 3. Hamish died 1st of May 2023, and this is what's in his death estate. There's a house, some chattels, some shares, a car, and you notice again they've given you 2 figures. We are looking for what was actually received. We have some funeral expenses. Now the house is going to be to his wife, which makes it exempt. Don't ignore it, don't leave it out, put it in, take it out, because the rules say everything in the estate must go into the pro forma, and then you exempt the assets. So you get marks for that, so be careful that you do. Now, 1 lifetime gift, £100,000 cash to his daughter, so it is a pet. In September 21, which is within 7 years, so that's going to become taxable. Now, it's on the occasion of her wedding, so we need to make sure that we deal with that. We're going to calculate the IHT payable as the result of his death. I'm going to show you the model answer so that we can see how that looks. So here we have the death estate. Again, a nice heading Show the examiner you know what you're doing, and I would put in the date of death. And we've copied through the house, the chattels, the shares, the cars, the proceeds, and we've taken off the funeral expenses. So tick them off through the question as you're doing them. Then we've removed, and we've called it an exempt legacy. Please use the technical term for that and explain what it is, because it's gone to the wife, which gives us a gross chargeable estate of £330,500. Now, there's the nil rate band, and we're going to have a little working to work out how many gifts have taken place. So the transfer of value, which was the pet to the daughter, took place in September 21, 100,000. It was on the occasion of her marriage, and as he is the parent, he is entitled to £5,000 of marriage exemption. The current year annual exemption, don't forget the date. The previous year, and make sure you put them in the correct order, 2021, giving a chargeable amount of £89,000. So there's no lifetime tax. That's covered by the nil rate band, but it is then, because it's within 7 years, going to use up part of that £325,000 which is available to go against the estate, giving £236,000 worth of nil rate band, leaving a taxable amount of £94,500, and that is then taxed at the estate value of £40,000, giving us tax due of £37,800. So let's go back to the notes and let's deal with the additional residential nil rate band. Now, there's a lot of notes and a lot of information about this, but what you have here is the information that is applicable to the TX UK exam. So the residential nil rate band applies where the main resident is held within the death estate and is inherited directly by the children or the grandchildren. Now, the examiner stated that a question will make it clear if the rate band is available. Therefore, you should assume that it's only available if there is a mention of a main residence. Be careful with that. The value of the main residence for this purpose is after deducting either a repayment or an interest-only mortgage and not an endowment. If the main resident is valued after the deduction of the mortgage at less than the available residential nil rate band, then the residential nil rate band is reduced to the value of the residence you only get. So if after it's been valued the house is worth 150, you are not going to get 175,000, which will create extra relief. You'll basically only get 150. That's what it's telling you. Any unused proportion of the residential nil rate band on the death of the spouse can also be transferred to the surviving spouse, and it's available even when the spouse died prior to the introduction of this new relief, in which case the unused proportion would always be 100%. Illustration just to show you how this works. Sophie died on the 26th of May, leaving an estate valued at 850,000. Under the terms of her will, she left all her estate to her children, and the estate includes a main residence of 325,000. So here is the estate valued at 850,000. Now we have £175,000 of residential nil rate band and the 325,000 nil rate band, all of which is a relief, leaving just 350,000 to be taxed at 40%. So the residential nil rate band of 175 is available because her estate includes a main resident and it is being left at her direct descendants. Transfer of an unused nil rate band. If any amount of the taxpayer's nil rate band is unused on their death, then the proportion of that can also be transferred to the spouse. You're unlikely to get one of these where there's a transfer, but just so that you are aware of that. Oops. So let's look at some exam technique, how this is going to work. In an exam question, and it's going to come up in an exam question, you will either have to do a big stage 1 with little 2, or a little 1 with big 2, or 3 with a little 1 and 2. Okay, but you will have to at some point do 1 and 2 and 3 in some form or another. You need to work out the chargeable transfer of each lifetime gift. Never lump them all together. They must be dealt with separately. If they are CLTs, okay, then you must do a computation of lifetime transfer. Make sure that you have annual exemptions put both against pets and CLTs, any exemptions for marriage. Ascertain who's going to pay the tax, because that's obviously going to be 20 or 25%. On the death, let's just finish that off. That's stage 1. On the death of the individual, you need to work out how many of those lifetime gifts are now chargeable. Do that 7-year drawing that I did and rework the tax on those. And then stage 3 is to work out what happens with the estate. Now, a multiple choice question, just so you're aware of this one. Special made the following lifetime gifts and agreed to pay the IHT on the second gift. A gift into a discretionary trust, so that's a CLT, with the gross amount transferred. Okay, that's the first gift. And then a cash gift into the same trust in May 23. How much is the lifetime tax paid by special in respect of the gift here? This one. So first things first, this gift here of 150,000, which is the one we're working on, will have 2 annual exemptions. It will have 23-24 and 22-23, because that's in 21-22. So we can take 6 off that, which leaves us down to 144,000. Now we've got a nil rate band of 325. And we need to reduce that by this gift, because that's already been worked out, 274,000, which leaves us with, squeezing this in, 51,000, and the balance of 93,000 is therefore taxed at 25%, giving us a tax bill of £23,250.